Good evening, everyone. Time for another silver update. This is the 1 hour chart of silver provided by netdania.com. You can click on the link below and you can see that we're kind of backing and filling here. It's getting tighter. I've drawn a couple of sets of trend lines here. The blue set here is the short-term 1 hour. You can see it goes back to April, and you can see that we're tightening up here as the range just seems to get tighter and tighter. If we go out to the daily, you can see that this other set of lines that's now blue is just outside of those, so that would be right here and right here. So we're definitely approaching the moment of truth as far as direction. Now, it doesn't have to be the final. I mean, it can be, things can spread out farther, but the market definitely seems to be behaving like it is going to reach a dramatic breaking point one direction or the other. At least that's the way it seems to be behaving. So we're seeing more of that behavior now on the 1 hour, and anything sold down gets bought up pretty quick. That's why you get these spikes here. So it's just filling. It's almost like the silver is just waiting for some event. Of course, there's a lot of events on the horizon potentially, and there's a lot of information coming out, way more than I can cover any day. If you go to the blog, there's probably we cover as many as 70 or 80 news articles a day coming out. So there's a lot of information coming out. But I wanted to go to the question of the day from SRJ19, and he points to an article. I hadn't seen this article, by the way. An article referencing interest rate swaps, and this is by Rob Kirby of Kirby Analytics, and he asks, can you honestly, I don't know what these interest rate swaps are, how they work, how they're supposed to hedge, what they are exactly. The article makes the point that the financials have been given a national security justification to defraud, manipulate, obfuscate in the interest of preserving dollar supremacy. If these points are plausible, it just adds to the big picture painted by others like Ted Butler, who also cries foul regarding a silver market. Who's doing it? Why it must be controlled? It seems the government has its dirty little fingers in a lot of pie. Scott. So the Kirby Analytics article by Rob Kirby is called "The Greatest Hoax Ever Perpetrated on Mankind," and actually in the conclusion he says, which pretty much summarizes it, he says, the U.S. bond market has been gamed beyond belief, and the only institution in the world with the means and motive to conduct this business is the U.S. Treasury, in conjunction with acting through the New York Federal Reserve. As such, U.S. bond pricing and interest rates are set 100% arbitrarily, and today represent the biggest financial hoax ever perpetrated on mankind. Now, the way that he gets there is he analyzes a series of purchases by Morgan Stanley, and he cites the fact that Morgan Stanley's derivative book grew $12 trillion in 1 quarter. And so he does some math and figures out how many that would take. And so the swaps are basically swapping interest rates instruments for other interest rate instruments. And so basically the conclusion that he draws is that there aren't enough interest rate instruments on the planet to do these swaps. So the question is, who's behind the swaps? And that's the conclusion that he reaches, that it has to be the Fed and the Treasury. It can't be anyone else that Morgan Stanley was doing the swapping with. And also he implies that this is a stealth bailout of Morgan Stanley using the ESF. I think it's the ESF, the Exchange Stabilization Fund. So go ahead and read the article. It's pretty complex stuff, but then again, it's not that complicated when you think about where could this money come from. It's going to have to be the Federal Reserve. And I wanted to spend most of the time tonight on this article by Jason Hommel. And Jason, for a while, wasn't putting out a lot of articles. In June here, he started putting out more. He's been running his JH Mint, which he has a coin store and sells. I don't know if he actually makes his own coins now, stamps them out, but he's doing quite a bit of business in selling bullion. Now, to the article, this is about Martin Armstrong, and an article that Martin Armstrong wrote about gold. And Hommel does, I know a lot of people don't like Jason Hommel. I actually like him. He's one of the guys that really got the silver story in my mind straight. But he just destroys Martin Armstrong here. And I don't have time to read the whole thing because it's very long. But when you look at the arguments that Armstrong is making, and then you look at the counter arguments that Jason makes, it is really clear. And let's start off with the conclusion, which is maybe a little bit disturbing, but it's you know, with the stuff with Ron Paul and some of the stuff we're seeing lately, it's people are starting to wonder, you know, what's going on and who's in what camp. But anyway, he says, now to my readers, I honestly do not, he should say do not know whether Armstrong is a charlatan or an ignoramus. Those are pretty strong words. I do not use those words to call him names or be rude, but to showcase my own ignorance. I don't know whether Armstrong is being dumb about gold on purpose with a secret intent to purposefully deceive a charlatan, or whether he is being dumb about gold because he is genuinely dumb, an ignoramus. I tend to believe that he is simply genuinely dumb. And he goes on. But those are some pretty strong words. You know, I've always wondered about Martin Armstrong whenever I've read his articles, because he always has had a weird slant on gold. Interesting commentary and interesting stuff on markets, but always kind of struck me strange what he said about gold. Well, Hommel really takes him apart here, so let's read as much as we can. On June 14th, Martin Armstrong bashed the idea that gold would be worth about $55,000 if there were no paper gold. He used only ridicule, not rational arguments, and he is wrong, as I will show. First, I will present two facts. The first is that all dollars are a form of paper gold, since they used to be a promise to deliver silver or gold on demand. Today, dollars are a form of defaulted gold, bearer bonds, that paid zero interest. They are literally a substitute for gold and can be redeemed for gold at any gold dealer. If all the U.S. debt were to be backed by the U.S. gold hoard, we can see what the value would be. 16 trillion divided by 261 million ounces is $61,000 an ounce, which is not far off the number that Armstrong ridicules. Second, an ounce of gold was not worth a man's suit in most of human history unless you counted it for the most expensive suit possible, such as a suit of armor. The most expensive suits today range from $40,000 to $100,000 to even $1 million. And he gives a link to expensive suits. In 1441, a suit of squire's armor cost 5 to 6 pounds sterling in the 1500s. By 1817, the pound became the British sovereign, a gold coin worth about 1/4 of an ounce of gold, so a suit of armor was worth about an ounce of gold, or about a year's salary. In responding to Martin's comments, I will reply in all caps. I'm not shouting. It's just easier to read who is saying what. In the event that you read this in a text-only format with colored text removed, Jason's replies are in all caps. And he gives a link to Martin's report. And he says, I'm refuting a part of the report starting at about page 20. You might wish to read the piece in full before my rebuttal, which interrupts his flow. Gold versus paper gold. This is Armstrong writing. The one piece of propaganda about gold that's gained a lot of traction is it would be worth more than $50,000 an ounce if the paper gold was eliminated, for that is the conspiracy that keeps gold down. And Jason says, It's not propaganda to say gold is going up very high. Propaganda is when you write stuff that the government wants people to believe. Freedom of the press is when you write stuff that exposes government lies, such as their propaganda. While Armstrong appears to be for gold, he really writes against gold. Now that is absolutely true and fascinating. That's also kind of what John Nadler does at Kitco, and there's a number of others that appear to be for gold, but they're really against it. Armstrong continues, a typical comment I receive, I agree gold will be the hedge, but remember, with gold valued at physical only, it will be worth at least $55,000 in today's dollars. That will get every government out of a hole. Some lucky individuals that has seen the way the tide is turning will benefit too, but mostly it'll be governments around the globe. There is no way they can tax their way out of this mess, end quote. This argument is just nuts and so insane it's hard to grasp who even makes up this bleep. And Jason says, please note the language he uses. It shows he's not rational, and he admits that he cannot grasp it intellectually. And then Martin says, all commodities trade in futures and physical. And Jason says, note, gold is not like other commodities in many ways. About 9 to 10 as I count the major ways. Gold is money for the following reasons. 1. The above ground supply of gold is very large relative to new supply. 5 billion ounces versus 80 million newly mined ounces. This ratio is 5,000 to 80 or 62.5 to 1. Or inversely, new supply adds 1.6% to the old gold. Note the following 9 attributes in 3 major categories. This next section is a cut and paste from my letter, and he gives the link to his letter. And this is absolutely essential knowledge that he gives here regarding why gold is money. He lays it out here. Precious metals are a great store of value. To be a store of value, 1, it should be long-lasting, durable. It must not be perishable or subject to decay. Gold does not decay, not even in salt water, seawater. Silver may tarnish and react with sulfur, but the tarnish is very thin and acts as a protective patina that prevents further decay. This is why food items, even expensive spices or even fine silks or oriental rugs, are not generally suitable as money. 2. It should have a stable value. Gold and silver values do fluctuate, but their value has never gone to zero value, like paper money often does. 3. It should be difficult to counterfeit, and genuine must be easily recognizable. Paper money is rather easily counterfeited, and goods counterfeited are very hard to detect. Precious metals are a great unit of account. To be a unit of account, 1. It should be divisible into small units without destroying its value. Precious metals can be coined from bars or melted down into bars again with a low percentage cost. Actually, gold gets more valuable when made into smaller 10th ounce coins, which carry a higher premium or price percentage over spot. Furthermore, gold, when distributed to the people, creates monetary demand and a higher value for the remaining gold in the world. Animal skins or live animals are not suitable as money because they're not easily divisible, nor can they be put back together when taken apart. If an item can be divisible, it can be fungible, which is the next point. 2. It should be fungible. That is, one unit or piece must be equivalent to another. This is why diamonds, works of art, real estate are not suitable as money. If an item is fungible, then it can be countable, which is the next point. 3. It must be a specific weight or measure or size to verifiably be countable. You must be able to weigh, measure, and count your unit of account. This is why paper dollars are not suitable as money any longer. What are you counting? What are you measuring? Dollars are nothing but promises to pay in more dollars. Precious metals are a great medium of exchange. To be a medium of exchange, 1. It should be cheaply and easily tradable with a low spread between prices to buy and sell. In other words, a low transaction cost and be able to be quickly and easily bought and sold anywhere in the world. Land is not transportable. Even U.S. cash is not accepted everywhere in the world anymore. 2. It should have a high value to weight ratio. and thus be easily transportable and cheap to store away. Precious metals have a high value to weight and size ratio. This is why oil, coal, or water are not suitable as money, even though they are valuable. It's why real estate is not money. It's not portable. It's why copper is not money, nor wheat, nor balloons. While even air is valuable and necessary to live more than 5 minutes, and air can also be fungible, air is neither rare nor valuable enough by any significantly measurable units to be useful, unless perhaps you're a scuba diver underwater. 3. It should be durable. Gold does not decay. Silver tarnishes a bit, but it's negligible. Coins are often mixed with 10% copper to improve hardness and durability, and coins are made with ridged edges around the rim to prevent coin shaving or debasement. Paper money, surprisingly, is actually expensive as money because paper wears out quickly and it costs money to reprint the paper. So those are just excellent points about why gold is money. You have to really think about those, and if you really think about those points that he makes, all 9 of them, you realize that gold and silver are money, and they are so by definition, and other things are not, and it's clear. And the question is, why isn't it clear to Martin Armstrong? Now let's read some more of, I'm going to jump down to the bottom where he rebuts some of these points that Armstrong makes, and it really is clear that he either doesn't get it or he's either playing a game or something. He says, gold is just not ready for price time. It will be, just not yet. If all this nonsense would stop, a lot more people would buy gold. And Jason replies, I think you are wrong. It's not my truth-telling that needs to stop to get people to buy gold. I think that if you stopped your nonsense, that a lot more people would buy gold. Then Armstrong says, right now, far too many assume to buy gold is a religion that makes no sense. I also get emails asking if I'm really serious and think gold would rise absent all the nutty scenarios. And Jason says, right now, less than $3 billion per year is buying physical silver in the USA, and maybe another $3 billion in gold. The stats on gold and silver eagle coins and stats on sales from a real bullion dealer puts into perspective, and he gives a link. The point is that with less than $6 billion out of maybe $2,500 billion in bonds actually going into real metal annually, that of course those who advocate real metal are in the extreme minority and are grossly misunderstood and are out of the mainstream and are ridiculed but mostly ignored to this day. Then Armstrong says, gold is not going up because of all the conspiracy claims, not because the real gold will conquer the paper gold. This is all about reality. Gold standards do not work because you cannot fix the price of money regardless what you call it. To try to do so is communism, where the real attempt to eliminate cycles. And Jason replies, no specie advocate is advocating price fixing. Again, you are misunderstanding the entire point and power of simply taking delivery. A free market that uses gold or silver as money is the exact opposite of fixing the price of money. The Federal Reserve fixes the price of money via manipulated interest rate setting. Futures fix the price of money as they lock in gold prices. People who freely use ounces of gold in trade are not engaging in price fixing. Martin Armstrong has this all backwards and is using the obvious failures of price fixing to bash a freely changing value of silver to gold, which, by the way, that's also what I advocate, which is in the Constitution, which is a bimetallic standard, non-fixed, freely floating bimetallic standard. So silver and gold can also float in their relation to each other. Then Armstrong says, gold is a viable part of the portfolio. It will rise to the occasion when the timing is right. The very people accused of keeping it down are the very people who will turn around and send it up as well. This is just about time, nothing more. When the time is right and people realize that the governments have no clothes, look out below. There will be a stampede at that time. Jason says, finally, we agree. but it seems you are simply a wolf trying to wear sheep's clothing, or a devil trying to appear as an angel of light. Yes, these are religious metaphors. Sorry about that. You are a gold advocate on one hand, but ridicule gold advocates on the other hand. You can't have it both ways, in my opinion, but rather you betray your own values and expose yourself either as a charlatan or an ignoramus. So that's a scathing attack by Jason Hommel on Martin Armstrong. You'll have to read the whole thing. He really does refute just about everything that Armstrong argues. I haven't read the original Armstrong article. I'm going to have to take the time and read that. But I've always been bothered by his take on gold. And it's never really made sense to me. I know he's a really bright guy. I know that he supposedly was locked up because he wouldn't share his secret recipe with the government. That's supposedly the explanation. But he's clearly wrong on gold, and Jason Hommel clearly points that out. There's no refuting the arguments that Jason makes. So very interesting stuff. There's a lot going on. It seems that there are a lot of people interested in preventing you from, and if not preventing you from, at least convincing you not to invest in physical metals. And I think, especially silver, gold, but especially silver, of course, because silver is the bullet that slays the financial werewolves and the financial vampires, because it's just so, the central banks don't have any. It's so low priced, there's so little of it, that any kind of public move by the masses into silver, it would just be end of story. So we're trading sideways. We're looking for a resolution of these converging trend lines, and I'm expecting to get some kind of move, probably significant, some kind of move within the next 20 or 30 days. At least that seems to be the point where these lines are going to meet, both of them. The blue lines obviously are going to meet sooner than that, but we may expand out to this range. So we'll just have to wait and see, and we'll talk to you next time.